Today is Wednesday, August 10th, 2022. Let us take a look at today's crypto headlines. 6 reasons why blockchain makes sense for commercial real estate, Deloitte. Has us inflation peaked? 5 things to know in Bitcoin this week. Bitcoin core contributor urges maximalists to take a different route. Metaverse is a change that's been happening for 20 years. Q&A with Forbes 30 Under 30 entrepreneur and investor in 300+ crypto startup. Please like, subscribe and turn on the notification button to keep supporting our channel. 6 reasons why blockchain makes sense for commercial real estate, Deloitte. The study reveals that blockchain technology is well positioned to take over more than 50% of the entire leasing and sale process across commercial real estate. Solutions built around blockchain technology offer several upfront benefits, including a censorship-resistant, irreversible distributed ledger. Deloitte's study revealed blockchain's position as a perfect fit for real estate use cases around leasing and selling. Blockchain innovations often outdo traditional systems by not only digitizing information but also introducing a near real-time trustless environment, among other features. Big Four accounting firm Deloitte uncovered 6 opportunities for blockchain to disrupt the commercial real estate (CRE) industry. The above infographic highlights 6 key pain points for CRE owners when leasing and selling their properties and maintaining complex transaction data. With this in the backdrop, Deloitte noted 6 opportunities for blockchain to serve the industry, which include improving processes around searching for properties and allowing people to make better decisions around leasing and purchasing. Due to paperless processes, Deloitte envisions blockchain expediting property and payment evaluations and better streamlining cash flow management. In addition, the technology's inherent qualities also offer cheaper means of managing property ownership history while enabling efficient processing of financing and payments. The study reveals that blockchain technology is well positioned to take over more than 50% of the leasing and sale process, excluding steps requiring physical intervention such as property inspection and loan negotiations. Deloitte noted, blockchain seems to be most applicable to dynamically configurable or co-sharing spaces, which have a relatively higher number of tenants and shorter duration leases. While Deloitte's report reaffirms blockchain's potential to drive transparency, efficiency and cost savings for commercial real estate owners, companies and CRE owners are advised to follow a 3-step approach: educate, collaborate or create, facilitate, in determining the best way ahead for blockchain implementation. While non-fungible tokens, NFTs, have been advertised as blockchain-based technologies, experts contradict the notion. Jonathan Victor, the Web3 storage lead at Protocol Labs, revealed that main chains are very limited in size, which in turn makes storing data on the blockchain to be expensive. As a result, NFT ecosystems often opt for off-chain storage solutions. Alex Salnikov, the co-founder of Rarible, confirmed the above claim as he said, despite the revelation, both experts noted that storage for NFTs can still be considered decentralized. Has us inflation peaked? 5 things to know in Bitcoin this week. The latest U.S. inflation data is poised for release this week as Bitcoin price action spikes higher after a promising weekly close. Bitcoin, BTC, goes into another key macro week in the United States with a welcome break to the upside. After avoiding a now familiar breakdown around the weekly close, BTC/USD is surging higher on August 8 to once more tackle resistance in place for 2 months. Can the bulls win out? Momentum appears to be strong across crypto, but a host of potential stumbling blocks lie in the way. With fresh US inflation data due, the macro picture could yet upset the status quo, while sellers likewise show no sign of budging to allow reclaim of levels above $25,000. Amid continued claims that Bitcoin is enjoying nothing more than a bear market rally, at the state of play on the market as the new week begins. These 5 factors will be worth bearing in mind when considering where Bitcoin price action could be going over the coming days. BTC seals second week above key bear market support. Unlike recent weeks, Bitcoin allowed traders to breathe a sigh of relief at the August 7th weekly close. Instead of declining at or immediately after the candle close, BTC/USD instead began gaining, these gains including an impressive hourly candle, which saw almost $500 added. The close in itself was impressive, constituting Bitcoin's highest weekly candle close since June, a firm break from the previous weekly downtrend. In addition, BTC's price defended its key 200-week moving average, MA, 2 closes in a row, cementing the likelihood of that trend line now forming support. This comes despite multiple retests during the week, with the 200-week MA sitting at around $22,900. For popular trading account traders on Twitter, this would take the form of a big violent move, one which ended up being to the upside. I know it's hard to convince you that $BTC has touched the bottom. But you can't ignore it. Never break this line in history, fellow account Jibin added alongside a weekly chart featuring another MA trend line. Looking at possible targets, anywhere between $25,000 and $28,000, commentators believe, one trader's expectations of a $30,000 retest. Analyzing separate data governing 2 exponential moving averages, EMAs, meanwhile, trading resource stock Money Lizards agreed with Jibin about a macro bottom already being complete for Bitcoin. Cycles repeat. Shortly after EMA bands crossing, cycle low is in. From there, the uptrend is close, it's summarized on August 7th. Midterm target 38K, 40K which be in this descending resistance level area. After this, we'll see a breakout and another bull run. $40,000, while lofty by today's standards, is also not without its adherents, even as part of an extended bear market relief rally. US inflation picture complicated by falling commodities. The main macro event in what is otherwise a sleepy summer month is due in the coming days. US inflation will become top of the list of discussion topics in crypto and beyond on August 10 as the Consumer Price Index, CPI, figures for July hit the radar. The schedule is already ingrained in the minds of risk asset traders everywhere. While not indicative of a specific trend in and of themselves, CPI releases are reliably accompanied by market volatility before, during and after the fact. The question is complex. Fuel prices began decreasing in July, while CPI components such as rent prices conversely hit all-time highs. The decline in commodities is a key cause for optimism for Tesla CEO Elon Musk, who used the trend as a basis for suggesting that inflation would be going down from here. This could change, obviously, but the trend is down, which suggests that we are past peak inflation, he said during Tesla's annual meeting of stockholders last week. After months of key interest rate increases, meanwhile, the Federal Reserve will not make a decision on further monetary policy moves until September. More broadly, the central bank is in a bind, commentators argue, being unable to hike rates much further without unintended side effects. Old hands hodl on. According to on-chain monitoring resources, hodlers are unmoved by the latest upticks in BTC price action after months of declines. While this is nothing unusual, it remains interesting to see how long-term holders' resolve will be tested should further gains enter. In automated updates this week, on-chain analytics firm Glassnode noted that the amount of the BTC supply last active in the past 24 hours is declining on average, potentially reflecting a lack of knee-jerk reactions to price moves. Likewise, the 7-day MA of median on-chain transaction volume reached one-month lows of its own on the day, beating its previous lows from August 1st. On higher timeframes, the trend is also visibly skewed toward pragmatism. The portion of the BTC supply which has stayed dormant in its wallet for 3 years or more continues to increase, reaching new all-time highs of 38.426% on the day. The changes are more easily viewed on the HODL waves metric, which provides an overview of what proportion of the BTC supply has remained dormant for specific lengths of time. 2022, it shows, has seen a marked increase in coin stationary for between 1 and 2 years. Coinbase order book is dead. On the topic of hodling, current conditions appear to be firmly lackluster for exchanges amid little genuine interest in buying crypto assets. While the world's largest asset manager, BlackRock, announced a partnership with U.S. exchange Coinbase last week, its order book remains dead, one commentator puts it, with retail interest absent this summer. Byzantine General further noted a crazy imbalance between bids and asks, indicating that the majority of exchange users are waiting for BTC/USD to match its June lows of $17,600. Sentiment unironically marking price bottoms. When it comes to the bear market rally, sentiment data may offer an unlikely clue as to whether the true bottom is really in. As noted by research firm Santiment and macro analyst Alex Kruger, mainstream interest in Bitcoin bear markets in fact tends to peak just after, not before, macro asset price bottoms. While Kruger contrasted the events of March 2020 with 2009 in the S&P 500, Santiment pointed to social media content relating to Bitcoin around BTC price floors. Even mentions of classic crypto crowd terms such as Moon and Lambo peak once the worst of the price drawdown is done, it concluded in findings published last week. During the crypto slide in 2022, the crowd has been calling for Moon and Lambo in a sarcastic fashion whenever prices drop again. Researchers explained on Twitter. However, the true irony is that spikes in these words are actually often marking moments when $BTC is about to rise. According to the sentiment gauge, the Crypto Fear and Greed Index, meanwhile, support is building above the market's extreme fear zone, which has been absent since mid-July. The index measures 0.31 on August 8, unmoved versus the day prior and representative of fear being the overall market mood. Extreme fear corresponds to a score of less than 25. Bitcoin Core contributor urges maximalists to take a different route. Matt Corallo urged the Bitcoin community to drop the US versus them culture, which leads to attacking projects other than BTC. There was once a time when Bitcoin, BTC, was the only crypto project that was not a scam, and advocating for only BTC made perfect sense. According to a Bitcoin Core contributor, however, This has not been true for a while, as he urged the community to drop the US versus them culture. In a Twitter thread, Matt Corallo, who contributed to the Bitcoin Core, pointed out to the community that at the moment, instead of BTC proponents advocating why Bitcoin is unique and remarkable, they are spending time attacking other projects. According to Corallo, this situation is leading to what he described as a narrative war, where crypto projects bash each other. Corallo further explained that Bitcoiners coming after Ethereum for the upcoming merge, saying that proof of stake, POS, will not work, will, in turn, push Ethereum proponents to lobby with regulators against Bitcoin with the same environmental angle. Lastly, the developer urged Bitcoiners to focus on talking about Bitcoin and its positive aspects and drop the culture of attacking other projects that are not BTC. Despite the call for more respect and courtesy for other projects, some Bitcoiners still remain unfazed. In response to the thread, Twitter user BitcoinCO said that anything other than Bitcoin is a scam. They said that some projects look legit but are ultimately scams in the end. In July, Bitcoin proponent Michael Saylor said in an interview that all POS networks are securities and are very risky. He argued that Ethereum is a security because of its inherent features such as being issued through an initial coin offering. He noted that it's up to regulators to decide if these projects should continue or not. Meanwhile, Ethereum co-founder Vitalik Buterin has been actively defending Ethereum from critics. Buterin called out arguments against Ethereum voting and described one as an unmitigated barefaced lie, saying that Ethereum doesn't conduct voting on protocol parameters. Metaverse is a change that's been happening for 20 years. Q&A with Forbes 30 Under 30 entrepreneur and investor in 300+ crypto startups. The metaverse isn't something that is waiting for invention, it is a natural progression that has been in the works for over 20 years. Looking at Evan Lutra's success as a Forbes 30 Under 30 entrepreneur with a portfolio of over 300+ investments, few would suspect his humble beginnings. Evan's journey started at the age of 12 when he learned the ropes of the business world after his father's call center failed, leaving him access to 200 computers. From there, the rest of the journey is history. Lutra is now being recognized for building and selling multiple companies, with products that have over 1 million users, all before reaching the age of 15. Now regarded around the world as a blockchain expert and NFT enthusiast, Lutra joins the ranks as a believer in the metaverse. A virtual realm that organizations like Grayscale believe to be a trillion-dollar opportunity. To uncover the value of the metaverse, and its impact on the world today, Rachel Wolfson sat down with Evan Lutra to discuss Web3, market sentiment, and the transition into the virtual realm. 1. Which metaverse companies are you most excited about? Most of you have already heard about how Facebook is changing its name to Meta. Facebook owns WhatsApp and they own Instagram, arguably two of the most used apps on the planet. Facebook works on the attention economy, meaning any money they make is by getting your attention. Now, why would the largest social media company in the world change its name to Meta if that wasn't where our attention would be in the future? Most people think a metaverse is a virtual place, similar to the movie, Ready Player One. They're wrong. The metaverse is not a place, It's a moment in time. Like artificial intelligence, you have this idea of singularity. It's a moment in time when I become smarter than humans. Therefore, the metaverse is a moment in time when our digital life is worth more to us than our physical life. It is a gradual change that's been happening for 20 years already. Every important part of our lives is going digital right now, from factories to laptops, boardrooms to Zoom calls. And friends? Before, it was your neighbors. Now, it is your followers on Twitter or Reddit. Looking at games, more kids play Fortnite than basketball and football combined. Identity filters are the new makeup. Stories are your personal billboard to broadcast to the world who you are. Now, what matters more? What do you look like in real life or on Instagram, as everything goes digital? 2. How important are the differences between Web 2 and Web 3? For background, Web 1 was when there was a lot of content created that you could consume right then. Then there was Web 2, where you could create content and publish blog articles or videos. Now, we are moving to Web 3, where you can actually own your content too, so it's no longer a centralized entity. As a result, the main difference we are seeing is that this is better for society, and it's better for the people when they actually own their content, their data, and their assets. Foundationally, this is a very big change in how things were being done in the past. What's going to happen now is that most of the applications built on Web 2, like social media, will see a Web 3 version come up and take over market share. As I mentioned earlier, why do you think Facebook changed its name from Facebook to Meta? It is because they realize that these are the transitions happening right now. 3. As an investor, how do you determine which NFT projects are worth your time and energy? At the end of the day, if your goal is to invest in something you like as an art, then obviously invest as much as you like. But, if your goal is to invest in NFTs as an investment hoping that it goes up in price, there are a few things you need to look at. Including how big the community is and if you think the community is strong enough that the flow of the price of the project will keep going up. Do you think there are more people interested in acquiring this project? So there are a few things you look at. But ultimately, it is for you to decide what your goal is behind buying that NFT. 4. Any projects you're personally excited about? I'm invested in over 300 projects just in the last year and many more over the last decade. However, the ones that excite me the most right now are Whitley, Iokan Labs, 1-11, Zaina Labs and MetaMentors. 5. What are your thoughts on the crypto market today? I'm very bullish on crypto. I'm heavily invested, and as a full-time investor and entrepreneur in the space. My task is to grow this space forward, and what I see is more and more of the smartest people in the world getting involved. The market is doing well, and there are many people who probably were wondering when Bitcoin will cross $100,000. I can't tell you that, but I can tell you that the best way to predict the future is to go build it. Don't forget to like, subscribe and turn on the notification button so that you won't miss any updates.